In this video, I will be showing you uh, how to spot the beginning of an impulse wave. At Potential Miners International, I've said this over and over that we largely trade waves in the market. So in this video, I'm going to be showing you how do you spot the beginning of an impulse wave, how to spot the beginning of an impulse wave. This is very important, and this is what we call using uh, the concept of money box. This is crucial. I want you to pay close attention to what I'm going to be discussing with you. This concept is going to change your game, believe me, as a forex trader, especially if you are the type that trade waves. If your trading system or trading strategy or methodology uses wave or trade wave, if you trade wave, this concept is going to really help you a lot. And in the Potential Miners International, we have three types of wave that we can trade. It's either you are trading the monthly wave, that's types of wave. Let me just, so that you can get that types of waves that we trade at Potential Miners International. We have the monthly wave, the monthly impulse wave. Let me put it that way. Impulse wave. We have the weekly impulse wave, impulse wave. Then we have the daily impulse wave, impulse wave. So if you must understand the concept of money box, there is need for me to talk about the different time combinations that we use at Potential Miners International. Time frame combinations. So we have three different time frames. We have the anchor time frame, the anchor time frame. We have the confirmation time frame. Then we have the entry time frame. I want you to pay close attention to what I'm going to be sharing with you in this video. It's really going to change the game for you. So having said this, suppose you want to trade, let me pick maybe weekly impulse wave, for instance. I'm still going to do different videos for each of these waves. I will do a separate videos showing you different examples, and if possible, if we see any live trade that we can pick in the course of the video, I will I will still pick it and use it as an example. I will show you how to trade the daily impulse wave, the weekly impulse wave, and the monthly impulse wave. In fact, as a matter of fact, by the time you get each of these videos, you can now decide, okay, do I really want to be trading weekly impulse wave alone or daily impulse wave alone? But what is important in any of these wave is that you should be able to identify the money box. Now, the money box of any impulse wave is the beginning of that impulse wave. Money box is the beginning. Money box is the beginning of any impulse wave. And this is so because this is an area, either an engulfing area or an order block that an engulfing area or order block that has enough liquidity to initiate an impulse or impulsive wave. Take note of this. Now, money box is usually the beginning of any impulse wave. I'm going to show you live examples after this theoretical introduction so that you will understand what I'm talking about. Now, money box by definition is usually the beginning of an impulse wave, and this is so because it's an area of engulfing price action or order block that has enough liquidity to initiate an impulsive wave. I'm going to show you, by the time I show you example, you will understand better what I'm trying to talk about. In essence, if you can spot the money box of any impulse wave and you can position yourself and identify the entry box after the money box. In fact, after this video, I will now do another video that will show you the entry box. But for this video, I want to focus on the money box so that you will understand clearly what money box is all about. Is that okay? Now, let me quickly say, suppose you want to, let me try to give you a theoretical picture. Suppose you are in a downtrend, maybe let's say on the weekly chart, and this was your this is the position or the outlook of the market. Now, the money box we are talking about will always come in around the beginning of a new impulse wave, something like this. You say money box, money box. Let me say this is weekly money box now, or let me just weekly money box WMB. Now, because this is a weekly chart, and of course, if the trend continues, you will still see something like this at the beginning of the next impulsive wave. Now, if you can understand how to spot this money box and position for it, it means you will join the wave even right from the beginning. And I'm going to be showing you, it's going to blow your mind. Let me look for an example. Okay, maybe I should use, let me use the CHF JPY as an example, since we have it here. So now, at Potential Miners International, if we are to start our technical analysis, what we do is that we come to the weekly chart and we activate this trend evaluation tool. The essence of that is we want to know the directional bias of our trend of the market at that particular time that we are trading. And of course, when the trend evaluation is showing us that the trade the directional bias is a buy, we will only be taking the buy. And when it's showing us that it's a sell, we will only be taking a sell. For instance, suppose at this point we activated the trend or directional bias gauge, and given the fact that the price is above the cloud around this place, the price at this place is above the cloud. You see that is above the cloud, which means that the price is above the Chimoku cloud. It is obvious that we are in a directional bias, that is a buy. Now, the next thing we do is that we go to the monthly to see what is our market orientation. You overview the market to see what is the monthly chart telling us in terms of the tendency of the market, the likely direction that the market is going to move into. That is market orientation. And of course, if you have listened to my video on market orientation, it will be very clear that this market is on a buy, on a markup. We say market orientation can either be a markup, a markdown, an accumulation, or a distribution orientation. So this is more or less like a markup orientation. Now, having confirmed that, the next thing we want to now do is we want to say, okay, I want to trade the wave now. Now, if I'm to trade the wave, I need to be able to trace the wave in terms of the top-down wave analysis. And you will go to the monthly, you want to see if the monthly is saying the orientation is a markup. Now, the wave that you want to trade, you need to start counting it from the monthly. Given the fact that in a monthly wave, you will have average of 3 weekly waves. So we have identified that this is a monthly wave now that we want to trade. However, we cannot trade this wave until the market is giving us a direction that is in line with the market orientation. So we wait for the market to close above the cloud to confirm that we have a bi-directional bias. So to now trade the weekly wave, which means inside the monthly wave, we want to take position for at least one of the weekly waves. Because if you are to trade a monthly wave, it means you want to start from the beginning of the month and you want to trade 3 different weekly waves. You can as well choose to trade one of the weekly wave inside the monthly wave. And of course, you can also trade one of the daily waves inside the weekly wave. You know, this is not really confusing, but I want you to just listen to it over and over and probably go back and check each of the videos I've uploaded on in terms of different top-down wave analysis, in terms of market orientation, in terms of directional bias. You need to listen to those videos in case you are finding this a bit strange. So we have identified the market orientation to be a markup. We have confirmed that we are in a bi-directional bias using the free tool because the price is now trading above the cloud. Now, the next thing you tell yourself is you identify the exact wave that you want to trade. Now, this happens to be an impulsive wave, and it was this wave that broke the cloud to the upside. So we are expecting that this particular market will correct itself, something like this. Then after the correction, the market should give us another impulsive wave. Now, I want you to watch this very closely now. Now, is this impulsive wave that we are interested in trading, this second one? Now, this is the first impulsive wave. Wave 1. And of course, because as at this time the market has not defined the direction in alignment with the market orientation, this wave we could not trade it because we were expecting that the directional bias will be in alignment with the market orientation that is a markup. Now, after this wave, now we wait for at least one period of corrective wave. I want to show you, this is like I'm teaching wave how to trade weekly wave, but my focus really is on how do you identify the money box. In subsequent video, I'm going to show you how to specifically trade weekly wave. I will now give you like 3 to 4 examples so that you will understand that if it's a weekly wave, this is how you pick it. But I want you to focus on the money box. How do you identify the money box now? Now, after an impulsive wave, you want to wait for at least one period of corrective wave on the anchor chart. Now, you know, at the beginning of this video, I talked about having different time frame, anchor time frame. Now, because you are trading weekly wave now, your anchor time frame is the weekly time frame. So the confirmation time frame will be the daily, while the entry time frame will be the 4 hours. Let me repeat that. If you are trading a weekly impulse wave, the anchor chart or time frame will be the weekly, The confirmation time frame will be the daily, while the entry time frame will be the 4 hours. Now, in this video, I will just show you how to spot the money box for, and I'm using a weekly wave as an example now. Now, you will wait for the price to do one period of corrective move, I mean to say. Now, that means that after this impulsive wave, you want to see a corrective wave for at least one full week. And this is the corrective wave, and this particular week now is the corrective wave that you, at least you must see one full week corrective wave. Now, after that one full week, the following week, you now move to the confirmation time frame, which is the daily time frame. So you move to the daily time frame now. Now here we are at the daily time frame. So on the daily time frame, you will notice that that same week that you want to pick the trade, you will notice that the price break structure to the downside on the daily. Something like this. Let me mark it down. So that's a break of structure bearish. You see that now. Notice that that week that you want to trade after one full week of correction started from here. You will notice that that particular week, at the beginning of the week, there was a break of structure to the downside. Now, immediately you have a break of structure on the daily. No, you might need to go and check my video. I talked about how you can use market structure in our trading system. Anytime you check the daily and the market structure is on a buy, you will only take a buy. Anytime you check the market structure and the structure is showing you a sell, you will only take a sell. In other words, I said it in that video that the best time frame where you can view your market structure, especially in the context of our own trading system, is the daily chart. So where you want to take a buy now, and now the market structure is showing a break of structure to the downside, it means that you will only be ready to take position when there is a break of structure to the upside. So if you experience a break of structure bearish, you will not take trade until when you have a counter break of structure bullish. I want you to listen to this very carefully because it's very important. This is how you can trade and trade like a professional. So you just position yourself for the market. You are not being driven by emotion. Now we want to trade weekly wave. Now the market has shown a break of structure to the upside. Now your money box will now be the origin that created that particular break of structure to the upside, and you call it weekly money box. Weekly money box. You see this? Weekly money box. I want you to look at it very closely. If you are trading on a weekly chart, I want to quickly recap this so that somebody can really grasp it very well. If you want to trade on weekly charts, you wait for at least one period after an impulsive wave on the weekly, and you have confirmed that the directional bias is in favor of a buy and the price is now trading above the cloud. Cool. You move to the confirmation chart or time frame. For a weekly wave, the confirmation time frame is the daily time frame. So on the daily time frame, it must be that the market structure is showing you an upward market structure. Are you getting it now? Which means that there must be at least a break of structure to the upside before you can be looking for any position. So immediately you spot a break of structure to the upside, the origin that created that break of structure to the upside is your money box. And that is where you wait for. You wait for price to trade back into it. I'm going to now go to the the entry time frame now. Remember, I said for weekly charts, You are going to use weekly chart as the anchor chart, where you will spot the impulsive wave and the corrective wave for at least one period. Then you move to the confirmation time frame, which is the daily. On the confirmation time frame, you are expecting to see a break of structure to the upside if you are buying. If you are selling, you are expected to see a break of structure to the downside after the correction if you are selling. Now, because we are buying, we are looking for a break of structure to the upside, and it has given us. Can you see? So this is our money box. For the purpose of this video, I will quickly go to the entry time frame so that you can see how it will play out, and this is what we look out for. So this was the break of structure to the upside. Can you see? This was the structure that was broken. Now, this was the correct, we are expecting the market to trade back into this money box. Remember that I said that a money box is either an engulfing area or an order block that has enough liquidity to initiate an impulsive wave. Now, if this money box is valid, it will always initiate an impulsive wave. Can you see this now? I'm going to pick another pair to show you the example of what I'm talking about, so that you will not be thinking I just pick this and I'm just using this to. This is how we trade, and this is what we look out for every time we are trading. So immediately the price trade back into this on the entry time frame. For this case now, 4 hours is the entry time frame. You are going to position, you are waiting for an engulfing move of at least 2 or 3 candles. An engulfing move from inside the money box of at least 2 or 3 candles. Note this, if it's only one candle that engulf maybe the correction into the money box, you are not going to take it. It must be at least 2 or 3 candles. Can you see this? Let me zoom this so that you can see. This candle, was a bullish candle. It could not engulf this one. This was a bullish candle. It could not engulf this. This was the candle that engulfed it. So you will notice that you have 3 candles that engulf. This is showing that the buyers for the market, the buyers are in the market now. And they are now showing that the bias of the market is playing out nicely. So you will now wait for the trade here at the tip of exactly where this was engulfed. You wait for it, and your stop loss will be below the lowest low before the particular engulfing move. So then you position, and you will take ratio 1:6 or ratio 1:5. Preferably, you can take ratio 1:6 or 5 if you want to, ratio 1:6 if you want to max out all your trade. But if you really want to probably just get out on time, you can take ratio 1:5. But whichever one is going to get to that, your profit target. This is how we trade. Let me see if I can see. Let me look for one more example. Let me go to Euro JPY, or let me use USD CHF. USD CHF, we are going to look at this together, and we are going to now apply what I've just taught you. Money box is that particular area of engulfing move or order block that has enough liquidity to initiate an impulsive wave. I want you to always remember that definition. A money box is an area of engulfing move or an order block that has enough liquidity to initiate an impulsive wave. Now let's see this. You will notice that for you to trade this USD CHF, the first thing you want to confirm is, what is your directional bias? Like I said, if you have a trading system, you will not be trading based on emotion. If you take 100 trades, you will enter the 100 trade based on the conditions. So the first thing we consider is what is our directional bias. And we have said that we use a free tool. If you want this free tool, I think I've added it to the video I did about this gauge. You can look for that particular video on this channel, or you can make a request in the comment section of this video that you will need the free directional bias gauge. I'm going to, send the link to you. Now you look at the gauge on the weekly now. Whether you want to take a daily wave or a weekly wave, the directional bias is always, evaluated on the weekly wave, on the weekly time frame. So now it's clear that the price is below the cloud. So we want to now take trade now. The price has been below the cloud from this place. From this place, the price broke below the cloud from around this place. From this place, from around this place. You see now? So we are at liberty to take a sell now on this particular chart. So let's now go to the daily chart. In this scenario, I want to show you another, maybe let me just use daily time frame. I can as well use weekly, but let me use daily time frame. Let me pinpoint one daily wave here. And for you to be able to do that, you will still need to know how to spot that of weekly. So I'm going to quickly spot the weekly. I will now trade one daily wave within the weekly wave. You will see how I'm going to pick it now. Now, what is the wave that you want to trade? You want to trade a daily wave. You need to start your wave analysis from the monthly. Look at this now. You go back to the monthly, you see that the directional bias is on a markdown. We broke a particular region of, this was a distribution region. Or let me say a reaccumulation, a redistribution region that we have broken to the downside. Now, because you can see that there was, what looks like there was a distribution here. I mean, there was an accumulation here, but it could not break to the upside. Assuming this particular market broke to the upside, this particular ranging area will be an accumulation. But because it could not break, it will be considered as a redistribution phase. A redistribution phase. Are you getting it now? So that is our market orientation. So we are clear on that. And on the weekly chart, we are clear on the directional bias, that the directional bias is a sell. So we now want to trade on the daily. So let's see how to spot our wave now. You will notice that when this particular corrective wave move started, there was a break of structure. Can you see a break of structure here? And I said that on the daily chart, you want to ensure that the market structure is in favor of the wave that you want to trade. So we will not do anything until there is a break of structure to the downside, because we want to sell now. Now, I want you to pay close attention and look very closely. You will notice that there was a break of structure to the downside around this place. So break of structure bearish. And you see that now. So, and I said that if you are to pinpoint a weekly wave, it should be the origin or the other block that created the break of structure. And this is our weekly money box. This was how I identified it in the previous example. Now, immediately the price has touched the weekly money box, you can now position for any of the daily wave inside the weekly wave. So the market came back into the weekly money box like this. Let's say there was a break of structure to this side. The market came back to this place inside the weekly money box, and you can see another break of structure. If you look closely, the market now start to move. This was another break of structure. You see that now. You see that now. Now, you could have traded any of these daily wave provided that the weekly money box has been tested. You need to take note of this because it's very important. Although the focus of this video is money box, in the subsequent video I'm going to really highlight how to trade the weekly money box with different example now. But if you will trade a daily wave, you must ensure that the weekly money box has been tested, or there was a consecutive daily impulse wave, at least two of it. Suppose this was not tested, you must have had a daily wave to the downside like 2 times before you can ensure that you can now take a daily wave. Are you getting it now? Don't worry, in the subsequent video I'm going to do separate video that will show you the daily wave and the weekly wave. But let's see how we can pinpoint the daily money box on this chart now. Let me clear this particular diagram. So suppose we want to trade this particular impulse wave. You see, this is an impulse wave to the downside. Now this is a corrective wave. Ensure that if you are trading a daily wave, there must not be a break of structure to the upside if you want to trade a sell daily wave. Are you getting it now? And if you want to trade a buy daily wave, there must not be a break of structure to the downside on the daily. Now for daily wave, the anchor chart will be the daily chart. The confirmation chart will be the 4 hours, while the entry chart will be the 1 hour. Let me repeat that. For a daily impulse wave, whether you want to sell or you want to buy, the anchor chart is the daily wave. The confirmation chart is the 4 hours, while the entry chart is the 1 hour. Now let's go now. I said that if you want to trade a daily wave, you must wait for at least one full period corrective wave on the anchor chart. Now, given that the daily is the anchor chart now, this was the impulsive wave that gave us the hint that, okay, now we are expecting a corrective wave, then we are expecting another impulsive wave. Now, you will wait for at least one period of correction on the anchor chart. This is the anchor chart. So you wait for, this is the period of correction that you must at least see, which means after an impulsive wave to the downside, you want to see, a candle that shows that there is correction, which of course it will print an opposite color. If it might be black, it might be blue, depending on the color of your chart. So after that particular corrective period, this is a full day correction now because the anchor chart is daily. So you go to the 4-hour chart, the confirmation chart. Now we are here now. This is the confirmation chart. Then you are now expecting, in this case now, you are expecting an engulfing move. An engulfing move. And the one I can see is this one. This engulfing move is what will form your daily money box. Daily money box. You see that now. Now, after the daily money box is formed, you can now wait for the price to come back into the daily money box. Then you go to the entry chart to take your position. Remember, I'm still going to teach you separately how to trade the daily wave. But this is just so that you can see the possibility of joining the impulse wave from the beginning using the concept of money box. This is the daily box now, and the price has traded back into it. So you will position your trade. Immediately you see minimum of 2 to 3 candle engulfing in the direction of the wave you want to trade. You see, this one is a bearish move. This is another bearish move, and this was the one that engulfed it. You position your trade like this. and the stop loss will be below the lowest low inside the money box, then you take ratio 1 to 6 or 1 to 5. Don't take more than that. Even if you have the price moving to ratio 1 to 7, on the average, take ratio 1 to 5 or 1 to 6 max. This is how you take trade, and this is how we trade at Potential Miners International. In case you are finding it a bit of confusing, you might need to rewatch this video and pause it at intervals so that you can digest what I really explained. Remember, money box is any engulfing area or an order block that has enough liquidity to initiate an impulsive wave, and that is what makes it very, very important. If you can learn how to spot it, you will be able to join any impulsive wave from the beginning, and you're banking huge profit for yourself. I want to believe that you are getting value from this channel, so I'm going to encourage you to subscribe and turn on the notification bell so that you can get a notification of any video I upload in the subsequent future, so that you can follow our training progression and you will not regret doing so. So stick to this channel. Expect new video. I will of course I will be posting video average of twice, you know 3 times or 4 times in a week, so you can get all this training, then you apply it to your trading system. Or if perhaps you are thinking maybe you really want to now learn our own trading style, it's very simple. You can reach out to me, or you just contact me, you message me on the comment section that you will like to really know about our trading system. I will start by sending you a summary draft, which of course I can even add to the description of this video. So you can download the summary draft. In the summary draft, you will see the overview of how we trade at Potential Miners International. You can go through it, and if it's something that resonates with you, you can now contact me, so that we can pick the journey from there. Till I see you in the next video, thank you for listening. God bless you.